It's time now for a look at the latest business news here on France 24. I'm Kate Moody. The eurozone's two largest economies have recorded disappointing inflation levels for the month of July. Germany, which is considered the motor for the eurozone economy, saw consumer prices rising just 0.8% compared to a year ago. That's the lowest rate in 4 years. Here in France, the picture was even more dismal, with an inflation rate of just 0.5% from a year ago, and month on month, prices actually fell by 0.3%. Other eurozone countries also reported lower than expected inflation rates, and there are growing fears that the bloc could slip into deflation. Many economists say that eurozone governments and the European Central Bank must take urgent action.
What should be done against this threat? The European Central Bank, supported by national governments, should damp down economic expectations to make it clear that they do expect inflation to return at some point. That means not only governments should announce investment, but we also want to hear from the central bank that it is ready to intervene and do whatever it takes to keep inflation at a balanced level. That is to say, close to 2% inflation per year.
Now, we got still more economic data this Wednesday from Japan, where the economy shrank by the biggest percentage since the earthquake 3 years ago. That's largely because of a sales tax increase that took effect in April, but it will put more pressure on the economic policies of Prime Minister Shinzo Abe, as William Hildebrand explains.
The numbers are in and they don't look encouraging. Japan's economy took its biggest hit since 2011, when the country was devastated by an earthquake and tsunami. A steep decline of 1.7% after 2 previous quarters of growth. But the drop was expected. In April, Japan's Prime Minister Shinzo Abe announced a rise in sales tax from 5 to 8%. His effort to curb the world's biggest debt burden led to a shopping frenzy. Since then, consumer spending has fallen 5%, but officials say there's no reason for concern.
I think it's important to look at the economic trend as a whole and not be carried away with the fluctuations of a spike due to last-minute demand and the subsequent reactionary downturn which the increase in sales tax brought about.
The International Monetary Fund has endorsed Abe's economic policy known as Abenomics. It expects Japan will see a recovery in the second half of the year. Business investment was better than expected and exports are forecast to grow. Under Abenomics, Tokyo's Nikkei stock market hit record highs. In 2013, it rose 57%. But the IMF says more must be done in the way of structural reforms, such as loosening the labor market and easing regulation on various sectors. Abe also expects a heavy rebound by the end of the year, and if the Prime Minister gets what he wants, he's expected to raise the sales tax to 10% in 2015.
Now, markets around the world proved quite resistant to all that data on Wednesday. Europe followed a positive trend from Asia. We saw Germany's DAX leading gains, closing up just under 1.5% there. CAC 40 here in Paris ending up 0.78%. Wall Street is also trading in the green, even though U.S. retail sales slipped a little bit last month. The Nasdaq up nearly 1% there. The markets around the world being driven by optimism about the situation in Ukraine, as well as some strong results from the utilities and insurance sectors. Let's take a look at some of the day's other business headlines now. The French bank Société Générale could face a trial in the United States, where the British lender Northern Rock has accused it of fraud. Northern Rock says it was misled about the quality of subprime mortgage loans sold by Société Générale back in 2007. Northern Rock later collapsed and was taken over by the British government. The trial could take place next year if the two banks don't settle. Northern Rock is claiming at least $34 million. Deere, the American manufacturer of farming equipment, has seen its third quarter profits dip 15% and sales slide 6% as U.S. farmers spend less money. It's also warned that it will scale back production this year as demand remains uncertain. And the Italian fashion house Roberto Cavalli may become Russian. Talks are underway for the investment arm of Russia's VTB Bank to buy a majority 60% stake in Cavalli for €500 million. VTB is Russia's second-largest state-controlled bank and has recently been hit by Western sanctions. But that doesn't seem to have been a deterrent for the fashion designer, who's been trying to sell part of his business for years. That's all for this business bulletin. There's more news to come. Do stay tuned to France 24.